What I'm going to talk to you about today is building up your credit after filing bankruptcy. We see that when clients come in here, their credits are generally well below 500 on the FICO score. They've had judgments, they owe money that they can't pay, there's been repossessions, foreclosures, etc. Generally, if you do a Chapter 7 bankruptcy and get a discharge, it'll wipe out those debts. The Chapter 7 will be on your credit for 10 years. However, we find that most of our clients immediately build back up their credit. Remember, Chapter 7 does not take away your ability to earn money. If you start earning money and you put money in a savings account, you can start building your credit up. You might want to go to a bank and get a secured credit card where you're in essence paying yourself back. You can try to get a car loan from a credit union. You might have to have 30% down, but generally you'll get a fair rate of interest. Once you make payments on that loan, your payment history will be perked right back up and you'll be well on your way to good credit. Generally, we find after about 2 years you can purchase a house, but in today's regulatory market you need significant down payments and you need your tax return to show that you can afford the house. A lot of times the mortgage financiers tell us that it's generally 3 times your gross income is what you can afford. For example, last couple of years, if you've averaged $50,000 a year on your tax return, you can maybe afford a $150,000 house. You will have to have probably $15,000 to $30,000 down. Your payments will probably be in the neighborhood of $500 or $600 a month, which is easily affordable on $50,000 of income. Generally, a good rule of thumb is try to avoid spending more than 20% of your net income on shelter. It's real important you do that, and that'll help you in the future build up more credit. Once you have obtained the fresh start of a Chapter 7 bankruptcy or a Chapter 13 bankruptcy, you'll realize how important it is to be very careful with credit. We do know medical issues can come up, and that can have a damaging effect on your credit, but those are just unforeseen and unexpected. Always try to have the best health insurance you possibly can afford so you can avoid these type of unexpected issues. Thank you.